Let us start with that Franklin Templeton quote, because it is a big one. Franklin Templeton, a firm with roughly $1.7 trillion in assets under management, is telling its clients that XRP plays a foundational role in global settlement infrastructure. Nobody is twisting their arm. This is what they are choosing to put in front of their own customers and advisors. That matters, because Franklin Templeton is not in the business of hype, they're in the business of guiding capital. They are essentially saying, out of all the digital assets out there, XRP is one of the most important pieces of the new plumbing. You do not see that kind of language being thrown around casually for every coin on the market. You do not see them describing every chain as foundational for global settlement. So when they single out XRP that way, it should make every serious investor sit up and pay attention. Now think about the competitive landscape. On one side, you have Franklin Templeton leaning into XRP, launching products, and talking about its role in settlement. On the other side, you have BlackRock, the largest asset manager in the world, still sitting out when it comes to XRP ETFs. That is not sustainable forever. BlackRock did not jump into Bitcoin and Ethereum because they fell in love with the technology out of the blue. They moved because their clients demanded access and because competitors were gaining an edge by offering those products. The same dynamic applies here. As Franklin Templeton and other institutional leaders start giving investors direct exposure to XRP through professionally wrapped products, some clients are going to move their money to where those options exist. The moment that capital flow becomes noticeable, the competitive pressure on BlackRock and others to add XRP products of their own increases dramatically. When your rival is using XRP to anchor its settlement story and attract new money, sitting out becomes expensive. The scale behind Franklin Templeton makes this even more compelling. They are not doing this with a tiny network. We are talking about tens of billions managed by partners like Copenhagen Infrastructure Partners, Actis, Digital Bridge, and many others across infrastructure, private credit, real estate, small caps, and fixed income. On top of that, there are thousands upon thousands of investment firms connected to Franklin Templeton, all now exposed to the same talking points. XRP plays a foundational role in global settlement infrastructure. That is not just one firm making a statement, it is a message echoing through a massive distribution network of advisors, allocators, and institutional clients. Ask yourself this. When that many professionals are being told that XRP sits at the heart of future settlement infrastructure, what does that do to long-term demand? While that narrative builds on the asset management side, Ripple is quietly and not so quietly building out the actual rails. Reese Merrick, the managing director for the Middle East and Africa at Ripple, has been highlighting some of the most important moves. Ripple completed the acquisition of Hidden Road and launched Ripple Prime, a global, multi-asset prime brokerage operation. Ripple Prime now serves hundreds of institutional customers and clears trillions of dollars across markets annually. That is not small retail volume, that is serious professional flow. When you start to imagine tens of billions clearing every single day over time on the XRP ledger through this kind of infrastructure, the scale starts to sink in. Add in partners like Treasury, which links into thousands of corporate clients that need the 24th of July 365 access to their money and yield opportunities, and you see how quickly this can put pressure on the rest of the industry to move to similar solutions. Think about the backdrop. The global FX market processes around trillions of dollars a day. Ripple has positioned itself to cover a massive portion of that landscape with its technology stack. Then you layer on the derivatives markets, which reach into the hundreds of trillions or even the quadrillion-dollar range in notional value. It is hard to believe that, over time, those contracts will not migrate to blockchain rails where settlement, margining, and collateral can all be managed more efficiently. When that migration happens, you want to be looking at which assets and which ledgers sit at the center of those flows. From FX to derivatives, from treasuries to corporate liquidity, the story keeps pointing back toward a handful of networks that can actually handle institutional-grade volume, and XRP is consistently in that conversation. Now let us talk about the XRP price conversation in the context of ETF demand, because this is where things get really interesting. Analysts are projecting that XRP ETFs and related products could attract tens of billions of dollars in flows over the coming years. Even conservative projections of annual inflows can dramatically impact price when you combine them with one simple reality: the liquid supply of XRP on exchanges is finite. There is only so much freely trading XRP available at any given time. When asset managers start accumulating XRP for ETFs, they need to source that supply. If the price stays low while demand grows, they simply keep scooping up everything that is available. At some point, the only way the market can slow down that absorption is by raising the price high enough that fewer holders are willing to sell. This is especially important when you remember that Ripple itself still controls a significant chunk of XRP in escrow, and regulation may eventually require them to own a smaller percentage of total supply. That raises all kinds of strategic questions. Do major institutions negotiate for pieces of that escrow? Have any deals already been quietly made? If the regulatory environment pushes Ripple to reduce its holdings below certain thresholds, does that create windows where large OTC transfers or strategic sales happen? We do not have all of those answers, but we do know one thing. If big players want meaningful XRP exposure, and there is limited exchange float, the long-term solution almost always involves a higher clearing price. People often ask, what is the high price for XRP? The honest answer is that nobody can give you a guaranteed number, but you can think in scenarios. If ETF and institutional flows into XRP grow to tens of billions per year on top of existing use cases and payments volume, a higher price is not just a wishful thought, it becomes a functional requirement to keep markets orderly. Prices in the triple digits are life-changing for many holders, and history has shown with assets like Ethereum that most people tend to sell too early. Many cashed out when ETH hit double digits or low triple digits, only to watch it run to thousands. The lesson is not, never take profits. The lesson is that in a new infrastructure era, once an asset proves it is core to the system, the upper bound on price is often far beyond what early holders originally imagined. Chad Steingraber and others make a critical point about the ETF era. The only sustainable answer is that the price must rise to slow institutional accumulation. If price does not adjust upward, asset managers with billions at their disposal will continue absorbing the remaining supply until there is very little left on open markets. When you add the possibility of regulatory constraints on Ripple's holdings, OTC deals, and dark pool sourcing, it is easy to see why the long-term direction of price, in a scenario where XRP wins significant settlement market share, tilts upward. Again, this is not financial advice, but it is a logical way to think about supply, demand, and structural flows. At the same time, it is important to zoom out and look at the broader crypto landscape. After years in this market, it becomes clear that most projects will not survive. You can probably narrow the serious long-term contenders down to a small handful of infrastructure-level assets: XRP, Bitcoin, Ethereum, Solana, Chainlink, maybe networks like XDC and XLM, and a few others that actually do heavy lifting behind the scenes. Meme coins and short-term hype plays will always exist and sometimes deliver wild gains, but when large institutions allocate seriously, they gravitate toward assets that tie into payments, settlement, data, or core infrastructure. That is where the real wall of money wants to live. Short-term, ETF trading can even create its own rhythm. During market hours, when these products are live, you can see consistent buying pressure that lifts price, even if only modestly. That makes the ETF's performance look strong to everyday investors watching charts and returns. After hours, with less structured demand, the price may flatten or pull back, only for the same pattern to repeat the next trading session. Over time, those intraday flows help build a narrative and a base for a bigger move, especially if underlying on-chain and institutional usage keep rising. This is why watching ETF flows, assets under management, and on-chain activity together gives you a much clearer picture than watching price alone. Data tools are also improving. Dashboards that track XRP ETF flows, assets locked, daily volumes, and on-chain indicators in a clean, digestible way are becoming more common. Instead of feeling overwhelmed by raw numbers, you can see trends. How many millions are flowing into these products, how much XRP is being held, and how that changes over time. The more transparent these flows become, the easier it is for serious investors to build conviction based on evidence, not just emotion. So where does that leave you? You are watching a moment where a $1.7 trillion asset manager publicly tells its clients that XRP is foundational to global settlement infrastructure, while Ripple quietly builds prime brokerage, payment, and liquidity rails that can clear trillions a year. You are seeing ETFs launch, flows build, regulators debate clarity, and institutions quietly position themselves. The key is not to panic over every candle. The key is to decide whether you believe this story is real and whether you want a seat at the table if XRP does end up at the heart of global settlement. If this breakdown helps you see the bigger picture, make sure you like the video and let me know in the comments by typing "Foundational XRP." Tell me what part of this institutional story stands out to you the most. Franklin Templeton's language, Ripple Prime's scale, or the ETF flow math. This is one of the most important transitions we will ever see in finance. Stay informed, stay patient, and stay intentional, because the decisions you make during this phase can shape your financial life for years to come.